Hey everyone, welcome back to Corporate Decoder. Today, EC just filed their latest 8K report and I'm spotting a critical update on their net asset value. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is giving us a peek at their common stock's worth, and it is good to know what is going on under the hood. This is Eagle Point Income Company Incorporated, and they are filing a routine report to give us the latest on their financial standing. The report is dated May 8, 2026, which tells us the information we are about to discuss is very recent. Now, let's dive into what matters most to investors. The company's common stock, which trades under the ticker EIC, is listed on the New York Stock Exchange. They also have another class of stock, the 5.00% series, a term preferred stock due 2026, which trades as EICA on the same exchange. This is important because it shows they have different ways they are raising money and different obligations. The main event here is an update on what they estimate their common stock is worth. This is often called the net asset value or NAV per share. As of the 30th of April 2026, management estimates the net asset value per share of their common stock was somewhere between $12.48 and $12.58. This gives us a snapshot of the company's underlying value per share, not necessarily the stock's market price. But what the company believes its assets are worth divided by the number of shares. This report is pretty straightforward, focusing on that net asset value estimate. It is like a quick check-in on the company's core worth. Unlike earnings reports that can be packed with numbers, this 8K is more focused. It's less about deep financial analysis and more about a specific value update. Now, what does this NAV estimate tell us for companies like Eagle Point Income Company Incorporated, especially those that deal with income-generating assets? The NAV is a really key metric. It helps investors understand if the stock is trading at a premium or a discount to its underlying value. Looking at their filings, the company has been discussing its financial results. For instance, they had a Q4 2025 earnings release where the stock, EICA, edged higher after a narrow earnings. Per share miss. This suggests that even with slight misses, the market might be sensitive to other factors, possibly related to the income they generate or the stability of their preferred stock distributions. The fact that they are providing this NAV estimate is a good sign they want to be transparent with investors about the intrinsic value of their common stock. It is not a guarantee of future performance, but it gives us a baseline. If the market price of EIC were significantly above this range, it would suggest the stock is trading at a premium, and if it is below, it might be at a discount. We need to remember this is an unaudited estimate. That means it has not gone through the full audit process that yearly financial statements do. So while it is a valuable piece of information, it should be taken with that professional caution. The other interesting piece of the puzzle is the 5.00% series, a term preferred stock due 2026. Or EICA, this preferred stock has a fixed dividend and a maturity date. Its performance and valuation can also influence the overall perception of the company and its common stock. News from February mentioned they scheduled their second quarter 2026 common and preferred distributions, which aligns with their regular financial reporting cycle. This filing itself doesn't contain complex financial tables like a 10Q would, but the NAV figure it provides is a crucial number for companies structured like this, which often operate as diversified investment vehicles. So, what is the takeaway here? Eagle Point Income Company Incorporated is giving investors a heads up on the estimated value of their common stock. It is currently estimated to be between $12.48 and $12.58. This is a useful piece of data for anyone tracking the company, but it is important to remember it is an unaudited estimate and not the stock's market price. The risk I am watching is how this NAV estimate aligns with the actual market trading price of significant divergence could signal either an overvalued or undervalued stock. What I am actually looking for is how consistently they can maintain or grow this NAV in future reports. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded, like, comment, and subscribe if you found this useful. Join our Discord for more.